What is going on YouTube? It's Sam, we're back with another one. So it's Tuesday, we're moving through the week, so I'm going to use this one as an opportunity to regroup with you on a couple of plays, talk game plan as we continue forward. But before I get the show on the road, make sure you guys are hitting that like button for me. Alright guys, so the market brought heat in full effect today. That's why you're seeing the volatility across the board. But what you're going to want to know is we already started off on the back foot because of those ongoing headwinds in the market, like inflation, like the delta. So it's not going to take much to push the market over the edge. Now it's only Tuesday and the market has already been introduced to two new aggravators. All right, so yesterday we saw the geopolitical tensions transpiring. Today the retail numbers have come out and they've been lower than expected. So it's a given we're going to see some volatility in the markets. But I want you to know the market is being short-termist right now. That's why we're seeing the anxiety, the panic in the markets. But as great investors, you got to take that medium to longer-term outlook. You got to take a step back, put everything into context. So we know earnings season has been a blowout for most companies. 80 to 90% of large caps come out, beat analyst estimates, and the economy is in good shape because this puts the market in good standing moving forward. Now I'm going to take a step back and talk to you guys about the retail figures that have landed today, put you guys on a bit of game because you know some of our heavy hitting plays are in retail. Now check this. So the headline figure was retail sales have dropped just over 1%. That's higher than analysts expected. They're expecting better numbers than that. But if you dig into the details, guys, there's a couple of things that you're going to want to know. We are comparing this to already a very high base from last month, right? We had a phenomenal month last month for retail sales, and moving forward, it's expected we're going to hit some stability and a call off in these numbers. So that shouldn't alarm you. Retail sales are still high and our plays in the space are still pumping right now. Another thing you're going to know is that drop in retail sales is driven by the delta, okay? It's not because of a change in consumer spending habits or their spending power, and that's what really matters. We want the sentiment to remain high as we move forward, and it will do. So if there's any easing of the delta, all right, we're going to see these retail sales pick back up in these numbers. Now, another thing you guys want to know is it's not a one-for-one correlation. Just because these retail sale numbers overall come down a few pegs, our plays, our cherry pick plays in the space, doesn't mean they follow suit, right? They might have gone up a few pegs over the month, and we know our players are coming up with guidance, amazing guidance for the rest of the year. So it shows that their businesses are firing on all cylinders. Now that being said, guys, what I want to do in this drop is bring to life a few of our retail plays, put you guys on some game, put them in the spotlight, give you the intel you need to know to continue to hit success with these plays as we move forward. So let's run the first play. So we're going to kick things off here. That's ticker symbol M. We've got Macy's. Now this is a play a lot of you guys are doing well in. You know I've got my end of year price target on this one of $21. Now if you check out the current stock price standing $18.27, we're not too far off my end of year price tag. That means between now and then we're going to see some volatility in the play. It's a given. Speaking of which, we've got earnings landing this week. All right, so it's an exciting time for all my guys who are in this one. Now I'm expecting volatility over earnings season. First off, I'm expecting to post up phenomenal numbers, right? Blow through estimates, post up great guidance moving forward. We might even see a bump up in their guidance moving forward, right? But we know the market can be harsh on these plays come earnings season. We've seen it with tons of plays. So I'm expecting a dip in prices. That being said, the game plan on this one is if you're in this play, in the run up to earnings, you guys haven't got long, got 1 or 2 trading sessions left. You guys are going to want to take some profit, right? For guidance, take out 25% at this level. You can leave the rest in to run. As I say, I'm expecting that dip post earnings. Now that'll be an opportunity to get back into the play, or for some new joiners to get onto this one if you missed them the first time round. Those of you who overlooked the play when I said entry on this one was around that $15, $16 mark before we took them up to the high teens, right? So if we see that post earnings dip, that's an opportunity to get into the play in anticipation of the run up to $21 by year end. But as I say, consumer spending is still high, the sentiment is there, the spending power is high, and Macy's have been transforming their business, right? They've been working through their debt levels, as I say, doing well from a business and an operational standpoint to get this one to our end of year price target. Our next play, that's ticker symbol UAA, that's Under Armour. Now check this. This one's down 6% on the day, now standing $23.50. Now the beauty about this play is they've taken out the guesswork because they've already come out with their earnings, blew through street estimates. It was a breeze for the play, and they post up phenomenal guidance moving forward. So despite the news that landed today, that retail sales have eased off the accelerator over the month, This is one that's still firing on all cylinders. They'll continue to do so as we move through some key seasons over the next couple of months and quarters. That being said, this one's open up a great buy zone right now. You already know, every now and then these markets going to get rocked, open up phenomenal buying opportunities, so continue to ease into this play. They could drop down to the 23. The game plan remains the same, continue to buy. Okay, the fundamentals haven't changed on this business, and I expect them to close out the year in the high 20s, if not the $30 marks. That's phenomenal upside on that current stock price. Our next play, that's ticker symbol LULU, that's Lululemon Athletica. As I told you guys, gave you the heads up, we will see this one below 400, now standing 392. Okay, this is an opportunity to get into this one because they will be back. Again, just like Under Armour, phenomenal brand that's been transforming their business over the last year. So I'm expecting this one to close up this year around that 450, 460 mark. Now this one's going to continue to trend downwards. They're going to cause a street surprise come earnings day. That being said, the game plan with this one is to ease into this one lightly over the next couple of sessions because their earnings will be in the next couple of weeks. So you guys have got some time to build your position. As I say, you want to get this one at the cheapest price point possible. So this one's going to trend down to the 380 mark, the 370 mark. Those are great opportunities to continue to accumulate your stake in this one, get as low an average cost as possible in the run up to earnings. Normally I don't give you guys plays pre-earnings because so many plays have come out, smash earnings. So as I say, it takes out the guesswork, but this is one that will cause a street surprise. The next one I've got for you, that's ticker symbol SPG. We've got Simon Property Group. I'm going to regroup with you guys on this one since we spoke about them a couple of weeks back. What we have on our hands is what we call a REIT. That's a real estate investment trust. This one's just manufactured different to your typical growth play. Okay, so we're talking stable, predictable cash flows. It's a good way to add some diversification to your portfolios. Now check this out. This one's been in full consolidation mode since May. Over the last couple of months, the market's completely overlooked their last earnings and they post up good guidance moving forward. As I say, that's a golden opportunity to capitalize when the market is sleeping. I told you, what the market will do is they'll skip an earnings, right? So they'll miss over this one, brush past it, but next time around, they'll take notice. That being said, I'm expecting this one to move up to that 140, 150 territory by the back end of this quarter, and thereafter, there's still upside because they're going to benefit from the continual reopening, easing down of the virus cases as we're going through key seasons. Again, high levels of consumer spending. All of that is going to play into their favor. Okay, so this is a solid bet to add to your portfolio. Again, that's ticker symbol SPG. We've got Simon Property Group. Alright guys, so those are the players I got from this one and the moves we're going to be making with. Newbies like myself might be put off by the bigger price stocks due to their bigger prices. With a smaller bank, is it wiser to invest in lower price stocks that move more quickly rather than higher price, slower moving ones? Or is it simply a case of it depends? Now this is probably one of the most biggest misconceptions for new investors. They think if you get into a stock with a low dollar value, you can easily double, triple, quadruple your money. And when you guys know that's not the case. Typically those types of stocks, they're going to be the most risky, the most volatile, early stage businesses, right? So if you don't approach them correctly with the right plan, the right exit strategy, you're going to get wiped out. Take it like this. One of our recent successful channel plays, that's ticker symbol IIPR. That's a stock that's over $200, by the way. That's returned 20% in just a couple of weeks. As I say, wiping the floor with tons of other faster moving plays out there that are $5, $10 that have either gone down in that time period. A better example for you guys, take a C Limited. That's a play over $300, returned us 50% since we last picked them up just a couple of months back. Okay, so it's not about the dollar amount of the stock, it's about the business and the valuation. Those are the things to focus on. I always say to my new investors, ensure you've got your foundation set in your portfolio full of quality plays that you can rely on that will continue to just generate you guys wealth in these markets over time. Now me, I don't have many plays in my portfolio under $10, under $5, and when I do add them to the portfolio, they don't last long because I'm in, secure the W, and then I'm out. Okay, so that's just the way I like to play the game. So that wraps up for this one. Now, if you've got any questions for me, drop them down below and I get back to you. I want to say I appreciate you guys. If you're new, join the movement. I want to see you succeed. I'm rooting for you. Let's get it.